And for our audience, can you maybe talk about the difference between hard money or private money and conventional loans and what kind of niche and purpose they serve?
Yeah, so I kind of tell everybody this when it comes to, well, I guess it depends who I'm speaking to. If it's a newbie, like completely new to investing, or if they're had a couple of transactions already under their belt, or if they're professionals, the way I approach it is a little bit different for everybody. But in essence, hard money is meant for business purposes. It's not consumer purpose. So it's not meant for you to live in like a normal conventional FHA loan. So that's immediately the two differences from the beginning of it. Hard money it's a private institution fund, if you will, and it's short. Where private money, when you hear private money, it's family friend. It's literally a family friend that has money.
Hey everyone, welcome to episode 18 of the Realized Gains podcast. I'm your co-host, Jordan Lee. I'm a mortgage lender licensed in 12 states based in Portland, Oregon. I invest in single-family homes.
And I'm Steven Tran. I'm an Oregon realtor, and I invest in multifamily and short-term rentals. And today we had a really great guest. We interviewed Alex Mora, who is a hard money, or sometimes known as a private money lender. And, I work a lot with Jordan, who is a traditional mortgage lender. So, Jordan, why would we use hard money?
Great question. So sometimes there's properties that wouldn't be considered financeable that you want to, buy and renovate. So classic is for flipping when you have a short-term loan. Other things you could use it for is if you're using the BRRRR strategy where you refinance afterwards into conventional loan. But yeah, it's a quick and easier access to money. But if you want to find out more of like specific strategies, tune into this episode. Hey everyone, welcome to the Realized Gains podcast. I'm your co-host Jordan Lee, and
I'm Steven Tran.
Alex Fan.
And we're here with Alex Mora.
Thanks for having me, guys.
Yeah, thanks so much for coming on the show. It was nice chatting with you a little bit before we got started here.
Yeah.
But maybe you could just, with our audience really quick, share a little bit about yourself, how you got into real estate, and your story, really.
So I started in real estate back in ending of 2019, right before everything kind of hit the fan. I kind of backtracked before that. So when I was 20, I had a goal of buying a property before I was 25. I wanted to be the first one, like in my whole family, to be able to buy something.
You're the first one in your family to own property?
Yes and no. So I have family members that have bought stuff, but they didn't buy it until they were like in their late 40s or mid 30s, if you will. And no one within my family that was around the same age had bought a house yet. Okay. So I was like, you know what? I want to be the first one that buys something by the age of 25. And
you wanted to beat out your older brother, or was it a cousin in particular?
Nah, not necessarily. I guess kind of for bragging rights. Like I just wanted to be that one that I said I did it, but not really say that I did it, kind of,
Uh-huh.
But so my girlfriend, who's still my girlfriend at the time right now, me and her have been together since I was 18, and she pretty much when I was 18 to 20, 21, just kind of living a crazy life, whatever. And she was like, yo, dude, what are we doing here? Like, are we going to buy something? And her dad has a background of like buying properties. He lives in Arizona, but he used to buy property. So she kind of knew that like, hey, I'm getting to that point where I'm trying to take this serious and I need to buy something, right?
Really? She's 18 and she was telling you like, hey.
Yeah, so we're the same age. So this is like
amazing.
Yeah. So we were 20 and she was like, hey, what are we doing? Are we going to work to buy something or whatnot? And she pretty much put like life in perspective. She's like, dude, like, I'm not going to keep doing this with you, like moving place to place. Like I want to own something. Mm-hmm. So pretty much she kind of set a fire under me and so I set a goal and we were like, cool, let's do this. How about we work till the age of 25 to save money, be creative however we can to buy something. And literally fast tracking, not even like 3.5 years, bought a property right before I turned 25, or 24. So I bought it like a whole year before. So I beat it by 1 year.
Nice.
And then I did that just because, again, I wanted to do it. I didn't go with the intentions of being like an investor completely yet. I just bought it because I just wanted to be the first one in my family to buy it at that age, and also because me and her had made an agreement that we're going to work together to buy this property, and that was at the ending of 2019, and then kind of just fast tracking to where we are now. Now I'm an investor buying multifamilies and do hard money loans because I'm a loan officer. So in a matter of like a year and a half, 2 years from 2020 to now, I just went heavy into real estate after realizing that, like, when I would speak to people, they would be so nervous to buy the first property, or I'd hear people's stories like, oh man, I don't know when I'm going to jump in and do this. And then I was just like, man, I already did this. Like, I already did it once. I was like, it was not scary. I was like, and granted, I didn't look at it the way I look at it now, but if, everybody has that saying, if you knew what you knew now, it'd be very different. But in essence, I was like, dude, this is not hard. I was like, if I did this once unintentionally, like not even going in the way that I did, I can do it again. So kind of doing that and rinse and repeat. That's kind of where I am now.
Just curious. I mean, obviously you bought it the traditional way, right? Just a conventional loan, FHA.
Yeah. So I bought that. I bought it at a 5% conventional.
Single family.
Single family detached 3-2 with a garage condo for $240. So crazy at the time. This is when like Zillow was like really big into like buying properties and stuff and selling them. Some of them didn't know what they were doing. They were listing properties at a significant price reduction that if you didn't know what you were kind of looking for, you would miss a bunch of stuff. And this property went up. It was funny. We were actually trying to buy. It was like a set of 10 or 20 of these, like back to back staggered. And we went to go look at one like on Thursday, and then the next day, the second to the entrance, immediately went on market. And there was like a $10,000 price difference, but the only difference was the one that we bought was completely renovated, and the other one was not renovated. It was just outdated on the inside, and it was a $10,000 price difference, and it was less. And I was like,
but dude. Zillow didn't know because
they just like a
thing that they
it's just one of those things. And I was like, something's not right here. So I went to go check it out, and sure enough, my agent at the time, he's like, so what do you want to do? I was like, dude, I was like, put an offer like when we go home, like immediately. We want to go look at this like at 9 at night because it went on listing like at 5 p.m. and like 4 hours later, so we want to go look at it, and like within 2 hours we put an offer on it.
Wow. So
it was pretty quick. Yeah, conventional FHA, or not FHA. I did the actual conventional 5% because at the time I was a first time home buyer, so you could do that as low as 5%. So it did not cost very much at all to buy it, which worked out great because I still had money, but I didn't have crazy money.
What were you doing for work at the time?
So my background comes from auto sales and telemarketing. So when I was 18 or growing up, my dad, not no more, but my dad has been in auto sales all his life. So when I was a kid, he pretty much taught me the importance of of communication, but of just building relationships and learning how to talk to anyone, whether it's your age demographic or someone that's, like 40, 50 years older than you. And so he learned all of that by selling cars, which is crazy. He learned his English by selling cars, and you can understand him at times, like you know what he's trying to say, and then you're just like, I know what you're trying to say. It didn't come out right, but cool, let's continue on. Yeah, right. But yeah, so he taught me to sell as a little kid, and so man, if I could make $1 off of a candy bar that I bought for 25 cents, I would figure out how to do it just because he taught me it from a nurturing point, I guess, if you will. And when I was able to work full time, he asked me if I wanted to sell cars, and I was like, hell yeah, man. I was like, I don't see why not. Make good money. At the time, I was like, I just want to make money. Yeah. And so did that, and I realized this was horrible because for one, you don't have a life at all. They're there like 24/7. But did that for like 6 years, then transitioned into telemarketing. So I was working for Xfinity for some time for like 2.5 years, and then had some other means end, if you will. So I did some other jobs just to get by. And that's kind of how I ended up in real estate. Kind of did a full circle, I guess, because at some point I knew I wanted to be in real estate. I just didn't know what it was exactly. But yeah.
Cool. Well, what got you into hard money? Was that the first thing you got into, real estate?
No, so that's funny. So when I first got into real estate, and we were talking about this earlier, so I had consumed a lot of bigger pockets, which I think is fair to say everyone starts at that point, maybe possibly. If not, they ran by it. But one of the biggest things that it took to heart after listening to, man, I don't even know how many hours, just countless of hours. One of the biggest things that I took from it was go to your local meetups, or just go to meetups, build relationships, and you'll unknowingly put yourself in situations that you didn't ask for, but they're good situations because you're in a room that you never would have been in had you not looked for it. So after I kept going to all these meetups, that's where I met my boss, and he after a meetup, he's known to party after these meetups. And by party meaning he just, whoever still wants to, keep on talking about real estate or just in general, they'll leave the location and go to like the next bar or whatever. And he just likes to have fun. And, I ended up being one of the like 10 people that stayed after, and I still had to work the next day. I wasn't in real estate completely like this. And this was like way out in Hillsborough, and I lived in Milwaukee, and this is like 10 at night on a Thursday night. I was like, dude, I still got to go to work tomorrow. And ended up staying out to 2:30 in the morning. Yeah, I don't know how many shots, drinks we had with like everybody, but I intentionally sat next to him, intentionally. And he started asking me like a couple of questions, and kind of fast forward between like a 10-minute conversation. He literally asked me, he's like, dude, do you want to sell debt? And I was confused, and I was like,
what does that mean?
I was like, what do you sell debt? He's like, do you want to do what I do? And I knew what he, like, for the most part, what he was doing. I just didn't know completely, because this was like the first time I maybe had a full on like conversation with him. And fast forward, he just explained to me, and I was just like, dude, where were you like 6 months ago when I was like asking everybody for a job? Because there was a point of time, like besides going to the meetups, so I think it was Gary Vee at some point. I listened to something that he said. He said something about like, if you want to be in a certain world, but your W-2 job isn't that, find a W-2 job that's in that world. So, and then it doesn't feel less of a like, oh, I have to do this. It's like I get to, and you can apply whatever you're learning within what you're trying to do. So it doesn't feel too much like a job in essence. And hopefully at some point you'll end up where you want to be, as that whole saying where your passion becomes your employment, and then you literally feel like you don't work ever again because you literally love what you do. So that's kind of how that happened, because I was trying to get into real estate, and I applied at every position that I can think of within real estate. I applied for like transaction coordinator to like brokerage, construction stuff, HVAC stuff. If you had your hand in real estate, whether it was like on an investing side or just transactional side, I applied to every job, and none of them give me the time of the day. And that was 6 months prior to where I met my boss. And that's when I had like jokingly asked him, I was like, dude, where were you like 6 months ago when I was like asking for a job for real estate? And he pretty much says like, dude, he's like, I don't know if it's something you want to do or not, but he's like, you're hired if you really want it. And I was like, are you serious? He's like, yeah. He's like, well, we can figure out the rest of this stuff, the logistics of it. But he's like, man, he's like, I think you'd be great. He's like, I just need to know if you're really down for it. And that was in October of last year. And then we got together and hashed everything out. And he's like, cool. You start the first day of the year of January, or this year. So I've been doing this now, the hard money, for 10 months now, 11 months. But yeah, that's how I got into hard money.
And for our audience, can you maybe talk about the difference between hard money or private money and conventional loans, and what kind of niche and purpose they serve?
Yeah. So I kind of tell everybody this when it comes to, well, I guess it depends who I'm speaking to. If it's a newbie, like completely new to investing, or if they're had a couple of transactions already under their belt, or if they're professionals, the way I approach it is a little bit different for everybody. But in essence, a hard money is meant for business purposes. It's not consumer purpose. So it's not meant for you to live in like a normal conventional FHA loan. So that's immediately the two differences from the beginning of it. hard money is a private institution fund, if you will, and it's short. Where private money, when you hear private money, it's family friend. It's literally a family friend that has money, and then you just have conventional, which is FHA, USDA, all that, right? So hard money, everything that you know about conventional, throw it out the window because it does not apply to us. Like in essence, I know all the hard money lenders here in Oregon, and a good handful in Washington, and none of us work in the same ways that regular conventional FHA financing works. We don't care about a lot too much. We care predominantly about the deal, the property, a little bit of you if the borrower, like we want to know, like, can we trust you with money, right? But beyond that, man, it's short loans, interests, their interest high, but again, it's meant for you to get in, get out. There's a ton of different loan products in between hard money. So it's not just like, here's a loan for in all general purposes. Like we still do bridge loans. So if you need to get out of another property, we can bridge that so you can, buy time to refinance, whatever. If you're doing new construction, like if you already bought bare land and you need to go vertical, we can fund that. I mean, literally, like if there's nothing there, we can fund it. And again, your general fix and flip stuff. So people that, see HGTV and stuff where they're getting that money, that's usually hard money. But yeah, so, there's points involved, there's interest. Beyond that, that's kind of it. And every lender is going to have, hard money is going to have different perks, if you will, like kind of like credit unions. If you go with a certain credit union, they might tell you like, hey, if you open up an account with us, we'll throw in like an additional $1,000 on your closing cost of your loan, right? So there's different perks. Every hard money lender has a different perk. The biggest thing from us is we advance all the rehab funds. So, or not all of it, 30 or 30K%, either or, whichever is lesser. So that's the biggest difference between us. No lender that I know of does that. And that's usually why people love us, is because if you were to close today's what, Tuesday? Probably by Monday, Tuesday of next week, we're immediately advancing a portion of your rehab funds. You're not actually like going into your own pocket to start your own project, if that makes sense. So
let's for some of our audience and don't know, in a typical or other private financing scenario, you acquire the loan to get the property, you spend money to repair the property, and the lender would reimburse you.
Yeah,
right?
correct.
So
Yeah,
that's difference I think you were trying to point out.
Yeah. So So in essence, there's two. It's either you front the money and then they pay you back, the lender. Whereas in us, it's flip flop. We're paying you in advance, so you're not actually digging into your own pocket. So like with a regular hard money lender, you have your down payment, closing costs, or if you want to just call it cash to close, and then you still have to go out and spend your own money for whatever rehab. But you go back and the hard money lender will reimburse you that money, right? Us, it's a little bit flip flop. You still have your cash to close, but instead of you going into your own pocket to start your rehab, we're immediately advancing you the rehab, and it works that way for every draw. So the goal isn't usually you never have to dig into your own pocket ever, because we're always advancing the money to you for the project, if you will. So that's the difference.
Significant, because some of your flips you might have a rehab budget of 100 or more.
Yeah. I mean, there's pros and cons to everything, no matter what. But in essence, that's how I kind of look at it. Like if you have a big budget of a rehab, like anything that's like 60K and above, and you don't have that like sitting in your bank besides the cash to close, I guess what you thought would have took you 6 months to finish a project, it's going to take you a lot longer, just because again, you only have so much actual cash to be able to, start the project or get to a point before you always have to keep asking for the money. Whereas in us, even if you still have maybe, I don't know, like 30K after, closing on a deal, and that's what your reserves are, we'll still front you the money. But if for some reason there's like a couple of days of a delay between us giving you money, you still have your own 30K. We're still going to refund you that back, because you're going to ask for it back anyways, if that makes sense. But yeah, it goes a long way, especially when you're kind of short on that cash budget, if you will, after cash to close, if you will.
Let's dive in a little deeper for our listeners. Like, give us a typical. I want to hear the cash to close, so that way we put some numbers.
Yeah, let's do a scenario. So, like, let's say we found a house. Alex and I were looking on the market. He found a listing, and it was $250.
Yeah.
So but it needed $100,000 of repair. So how would that structure look like?
Yeah. So us specifically, my company that I work for. So we do loan to cost. So a total of your loan to cost is your purchase price, which is you said is a 250, and then you have the rehab of 100K. So your total cost is 350. Depending again on a bunch of factors, if you will, but let's just say best case scenario.
Yeah, let's say we have good credit,
all the above,
some
cool.
reserves. Yeah.
All right, cool. So best case scenario here, or in a perfect world, we're going to loan up to 90% of the total loan to cost. So you do 10%, because that's the difference of the 90K, right? Or the 90%. So you're looking at that difference of 10% of 350. That's your down payment.
So
Okay.
$35,000.
So we come in with 35.
Yeah, 35, right? And then you still have your normal transaction costs on any kind of deal, right? So you got your taxes, your insurance, your appraisal, which again, depending where you are, that could vary. But the other factor is you have your points. Well, hard money that's where people kind of chime in. They're like, oh, that's a little bit expensive, but that's the point of these. They're risky for us, which is why they kind of have to charge it. But perfect world, 2%.
Well, and you're not holding the loan for 30 years.
Yeah, exactly.
You have to make your money.
Exactly, right. So if you do, the way I kind of put it out is usually I bank about like 18,000 at 2%. Your points plus the taxes, insurance, etc. So you got 18 roughly, and then plus that 35. That is your cash to close. That is what's needed to close this deal. Now, some lenders ask for reserves, so they might say like, "Hey, you don't need to give this to us, but we just need to make sure you kind of have it within all of your liquidity." So they'll be like, "Hey, we need 6 months of making sure you can have the monthly interest only payments, right?" So you do again whatever. I don't know, let's say 10% of interest. So you do 10% interest over the loan amount over 6 months. You have to have the cash to close plus those 6 months of reserves handy. But that's, again, every lender is a little bit different. Some might say, we don't care that you have any. Some will say, we need you to have like 3 months or 6 months. Granted, those are little things that just depends where you go. With us, we just want to see that you have 6 months. But that's kind of it. Not much more towards that.
Yeah, and can you explain like interest only payments versus a regular mortgage payment? So
Yeah. So when we refer to IOs or IO, interest only payments, right? It's literally, at least for us, versus conventional, is on a regular mortgage. You're when you make a payment, a portion of that is going to interest and principal. So your principal is getting paid down, and then obviously interest is interest. With us, your principal stays the same because it's interest only payments. So again, depending who you're talking to, they might say like, "Oh, that's bad." And to some of us, like investors, we're like, "Cool, I just need to know what's the cheapest. Like, how does this break down interest only?" Because if you look at it on a cash flow, like, what am I getting? I want the cheapest payment anyways because I'm gonna pay you guys off, and I just need to make the lowest amount of payments every month to maintain the project or finish it, right? So with us, or in general, interest only, you're just literally paying the interest again, depending on whatever you got for your terms. Whereas if a regular mortgage, you have to pay principal plus interest. Obviously, your payment's higher, but your principal goes down. With us, any hard money lender, your principal stays the same. It's just you're always making interest only, which is why the payment is significantly less.
Okay, yeah. And can we go over a little bit about the checks and balances? Because I know obviously if you're working with your regular mortgage lender, you go through underwriting, they're checking everything, and you said it's a little bit easier. It's can you kind of go through that process?
Yeah. So obviously, when you're getting a normal loan, like a mortgage, conventional FHA, whatever, USDA, they ask for everything. They want to know what you did 10 years ago, where you went to the bathroom. Like, dude, they want to know everything.
Yeah, Jordan.
Dude,
Come on,
dude.
2 W-2s, a pay stub, and a bank statement. And
Oh my God, man.
Documents.
But if for some reason you have like $3,000 out of nowhere that just popped up, they're like, "Yo, where are those $3,000 coming?" Now you got to explain everything. But no, joking aside, right? They just ask for a lot, which again I've gone through because of the process that I've had to buy my properties. But with us, man, we just need a general application. It's a formality, really. We just need to have enough to pull your credit. So really you don't need to like fill everything out. We would hope that you do, but we just really need enough to do that. Beyond that, we just need your liquidity. So all your accounts that you have, banks or your bank accounts, whether it's business, personal, if you have 401ks, pensions, whatever, just your total liquidity, the most recent 2 months. So all of it. And then beyond that,
That doesn't sound like no documents.
no, I mean,
I mean, it was
but
optional. Whatever you can provide.
yeah, right. So
you just need to show some amount of reserve.
you need to. Well, here's the thing: we need to make sure that you have the funds for what you're trying to buy.
Right.
So, like, if you show me your bank accounts and all you have is like $2,000, and you're asking for a loan, and your cash to close is like 40 G's, I'm like, yo,
Yeah.
there's money missing. Like,
Yeah,
how are we
yeah.
gonna do this, right?
Right.
But in essence, like, there's ways to finagle things, if you will. But we just need to see that you can buy what you're asking to buy. In short, right? Beyond that, that's kind of it, man. Like, if you want to close in an LLC, we just need your LLC docs so we can, go over that. But
So
beyond that, that's
Is
kind
that
of it.
not a requirement? Because I know in the beginning, these are designed for business commercial purposes. Am I hearing you don't need to buy in an LLC?
No, you can buy in your personal name if you want.
Okay.
I mean, usually everyone that I know is like flip-flop. They're like, hey, I'm buying this in my business name. And every now and then I'll get someone that's like, hey, I'm going to buy this in my personal name. And the only reason why it kind of reverses that is because sometimes people set up their LLCs, and the way like that, and because I see these on a daily basis, the way that these things are like written, sometimes, like, I'm not a lawyer by any means, but I've seen enough of these where I always tell people like, hey, I'm not a lawyer. You should probably talk to one. But for our company to fund this in your business name, there's certain verbiages that needs to change. For one, to protect us, but like longevity, like whatnot. But yeah, and because it gets too complicated sometimes, they're just like, you know what, screw it. I'm just going to close this in my personal name. That's the only reason why sometimes people close in their personal names. But other than that, yeah, we don't care if you want to close in your personal name or your business name. It doesn't matter to us. But really, that's pretty much it. Not much more. Obviously, if there's other, like, if you're doing like a construction group, ground up things, we ask more stuff. But a general fix and flip, the application, your liquidity, to show us that you can afford to buy what you're trying to buy. And if you want to close in a business, just your LLC docs. Beyond that, that's kind of it. Just obviously ID, a couple little things, but that's really the biggest things that we require, if anything. So,
Can you tell us about times you've been screwed over by your clients? How that works?
no,
You don't have
man.
to give specifics.
No, so
How about people who don't pay? And
People who
construction projects?
default.
Yeah.
I mean, let's talk about, the bad stories I think Steven's alluding to. Is somebody who
You don't have to give me any specifics.
No, yeah. No, I got you.
Watches HGTV.
Yeah,
right?
yeah.
Brother who's a contractor,
What happens
whatever.
there? Yeah.
And then, it takes 7-8 months, right? We're talking, this stuff.
I'm be completely honest, man. I think like all of the deals that I have been involved in, because keep in mind, like I'm a loan officer, but I also do the transactional side for 3 of our loan officers that are here in Oregon and Washington. And out of all the clients that we've dealt with, because again, we don't deal with that back end stuff, but I've only maybe heard once where like a client maybe did something or was part of something that kind of messed up the relationship that they have with their company. And then when they come back to ask us for another loan, our company's going to look at them and be like, yo, man, you kind of messed up on the last loan kind of thing. So they might not give them like we might not give them that rate that they probably got originally, because now they kind of tarnished that.
They're higher risk.
Yeah, right. So, but man, like I'm grateful enough that I think that all of our clients have actually never done anything to us. But I have heard stories where, like, because again, keep in mind, we advance all the rehab funds, right? Sometimes there was a time that I remember that there was a new investor. We need to know where we're going to wire your funds when you want rehab. And this person put down the general contractor's account and not their own personal account. So the general contractor walked away with 30 grand, because obviously that money goes straight to whoever you told us where to send the money, and they did no work and they walked away. Yeah. So it wasn't an us thing, but they came to us like, yo, what am I going to do? Or what do we do? Like, there's only so much that us as a company can do, or like we
roll up your sleeves.
Like, we kind of sent the money where you told us to send us the money, But it's part of the real estate stuff. Like, unfortunately, sometimes you learn this stuff the hard way, and sometimes it does. Yeah, it sucks, because you're just like, dude, if I could fund you the other 30 grand, I would, but like, we can't really do much about it. But luckily, I think it's because, again, like us personally, us loan officers, and within my company out here, we're very personable, and we tend to do business with everybody that is like genuine. And granted, they'll get referred to me by other investors that are very active. So like, I don't have anything to really worry about. And if I do, I kind of know that in advance, and we're kind of setting up the expectations anyway. So I mean, knock on wood, I have yet to do that. Like,
So you're not foreclosing on people regularly.
no, not even. And I mean, there's times where sometimes like a client will miss a payment, and we'll get notified because we have to kind of reach out to them like, hey, can you refill out the newest form because where we were trying to take out money, it got declined or whatever. And they're like, oh, dude, totally forgot. I closed out that account and I just need to update it, which happens, right? Like on a business basis. But beyond that, like nothing where we've like had to foreclose on somebody or we try to do everything, at least us as a company. I can't speak for everybody else. We try to set up all our investors for success.
Right.
So we work with you as much as we possibly can to like avoid the worst case possible scenario. But is there certain things that do happen between that and like completely foreclosing? Yeah, we try to help you out as much as we can. We don't want to be the reason why you don't succeed, because for one, if we tarnish that, then there goes a client, and the amount of revenue that we probably lost just by not trying to help, it affects us to that point. But us as a company is what I can speak for. Like I have yet to be involved in any scenario where we've done that at all. So which is great.
Yeah.
So. But yeah, so luckily, no bad stories completely. At least not like me personally. But
That's
but yeah,
that's good to know,
Yeah.
and I appreciate that. But I want maybe some of our viewers who, like I think you threw out a 10%, on the initial, is that like initial 6-month term? Say, right, things are taking longer, delays, whatever it may be. But when you jump into that 7th month, right,
Yeah, so the way that our structure works is it is our fix and flip product, I guess, to kind of go a little bit deeper into like the numbers or the nuances, if you will. So the way that usually works out for our terms is it's a 12-month term, and it's an automatic 6-month or 2-month extension with deferred interest. So what that means is, depending again on the deal, you as an investor will do a no deferred interest up till month 7. So for 6 months, you're just paying your normal interest only payments. And then when like month 7 kicks in, there's a 33 basis points that gets added to your total final loan balance for every single month. So if you went over 1 month, 33 basis points of your loan amount gets added. So and then obviously that's your new loan amount. If you go another month, then another month gets added on, right? Now, sometimes we can defer that until month 11 and 12. So that's literally how it looks like, but it always works out to a 12-month. There's no prepay, so you can literally use us, I guess, for the acquisition if you really needed to, because your conventional lender, like, excuse my language, shit the bed. But we come in and save it so you get the deal, and you can literally pay us off the next day. There's no prepays, but it is a 12-month term. It's either a 6-month with an automatic 6-month extension or a 10-month with an automatic 2-month extension. We are able to do extensions. So like if you get into that situation where you're coming to your maturity date, we are already pre-planning like 2 months before your maturity to figure out like, hey man, where are you at on your projects? Do you think you'll be able to either one, list it, refinance it before your maturity? And you kind of just tell me like, hey man, I'm like 90% done. I think I could finish, and I'll do what I can on my end to get you an extension for like 3 months, 6 months. And that's a one-time fee. It's every lender. There's a couple of clients that I've spoken to or potential clients that told me that their other lenders were going to charge them like a flat fee or an additional interest payment on top of their only interest payment. So every lender is a little bit different, but with us, it's literally a one-time fee. Sometimes, again, for whatever reason, especially in these crazy markets right now, people are a little scared with what's going on. So there has been a little bit of a mix-up on like possibly your rate going up, or you might get charged the one-time fee plus an additional point. Again, there's a bunch of scenarios, if you will, but in essence, for us, it's simply a one-time charge, and everything continues the same way that you had originally the past 12 months. But that's pretty much it. So it's interest-only payments, no prepay, a 12-month term, 6-month auto extension, or 2-month auto extension. But yeah, that's kind of it.
Sounds very generous in my opinion. That's awesome.
Yeah.
But I want to bring that up too.
Yeah.
As a fix and flipper myself,
Yeah.
right? I know, like, and I want our listeners to know too, right? Speed is the game here, right? And every day you delay, your costs increase, even though maybe it might be on the back end.
Yeah.
That's cutting into your gross margin profit,
Yeah.
basically. And so you want to be able to walk away with some money, ideally.
Oh yeah,
you know?
no, that's the whole point. Yeah, absolutely. I mean, I could tell you this, man. I tell people, anytime they hear hard money, they're like, "Oh man, you're expensive," and I'm like, you know what? Yeah, we are expensive, but I guarantee you, I'm probably the cheapest one, if not the most affordable hard money lender compared to any other hard money lenders. And usually it works out that way because for one, we tend to stay within fair and bottom, like what completely rock bottom is, but we're not like your true hard money that's like 13-3 or 14-2.5. Like that's not us. And then also the other thing is like, again, we're advancing we're advancing your rehab no matter what. Again, it's either by increments of 30% or 30K, if you will. So that's usually what wins people over. For one, we can close within like 5 to 7 business days. So if you tell me on Monday, like, hey, dude, I need to close next week on Monday, I'm like, cool. We have the structure to do that. If you want to close in your business, cool, we can do that. If you are using funds from like a 401k or someone else's money, if you will, cool, we can do that. There's a bunch of things that we can do, but it ultimately comes down to one, I'm probably going to be cheaper than anybody else on the interest only. May I be a little bit more expensive on like the closing, like in general? Probably, but you got to remember, I'm immediately giving you back that money. So even though you fronted, I don't know, like 70 grand to me or the company, I'm immediately maybe giving you back like 20,000. So now you're leveraged back into the deal. Like you got to look at it in the whole scope, right?
Absolutely.
And sometimes people they're like, oh man, you're more expensive than the other lender. I'm like, yeah, but are they giving you money back? They're like, well, what do you mean? I was like, well, we front you the rehab. Like, are they fronting you any rehab? They're like, no. I'm like, well you got to take that into consideration. Like, are you able to finish your project out with the money that you have and still wait? Like you were mentioning, flips, every day is expensive. Like the longer you hold it, it goes. And you start thinking, and you're like, man, if I hold this for another week, that's another like $600, $700. It adds up quick. And that obviously eats into your net. So for us, like it just works out great that for one, we're giving you the rehab money back and we're overall least expensive to everybody.
Yeah, I was going to say, like that's motivation for your contractor too, because like here's your money, let's get going.
Yeah.
Sometimes, when you have to wait for a draw, like you're like,
it's stressful.
Hey, I promise you, I'm gonna pay you once I get that first draw.
Yeah, man. Yeah, man.
It happens,
dude. It's stressful. I mean, so I do my own. When I do my own renovations, thankfully I haven't yet to like jump into something huge where I've had to like drop a deposit down. But man, I get investors like the day that they're closing, they're like, hey man, when am I to get that first check or the first funds for the rehab, because I got contractors lined up and they need to get paid like a deposit. I'm like, dude, just wait a couple of days. It should hit your bank account pretty quick. But it works out great, man. That's honestly where I think I love about our company, that we're just able to front you the money. And again, I have yet to meet a lender out here that is actually doing that. And if you guys do know somebody that does it, I would love to talk to them. I generally love to talking to other people just because building relationships, but just knowing where the businesses, I guess, in their standpoint, because I have yet to meet another lender that can do that.
Yeah, that's the first I've heard of it. So that's awesome.
Yeah. So yeah.
So I've heard that you can, as an investor, you could come in and give companies like yours, private money companies, like say $100,000, $200,000, and they'll invest your money in their clients. Is that a service that you offer, or is that more like smaller scale private money lenders?
I think that's more on the private.
So your sources of funding are different.
Yeah, so we have our own fund, like we have our own money. So like when you go to closing, that wire is coming from my company. It's not coming from some other small institution or something like that. It is always being wired by us. We do hold some stuff on our books, but we have a lot of, or put it this way, every hard money lender,
the secondary market.
Not the secondary market necessarily. There is a market for our type of loan. So every hard money lender that we pretty much sell all our loans to get like to the same people. So it's not the secondary market like the normal, conventional FHA where they buy back type thing, but it's identical to it. But they still we know like certain funds or companies that buy certain type of loans. So like if your loan is a brand new construction build with dirt land, we have a specific company that will buy those type of loans because of the structure, if you will. So but yeah, it kind of works out like the secondary market, just like the private side of it, of that world, the private equity world, if you will. But yeah, so we either hold it, if we don't hold it, we sell it, but that money comes straight from us every single time. That wires from our company's name. So
got it.
They're very different, but yeah, it's kind of more like a syndication kind of a little bit.
Mm-hmm.
You pull money and then you buy something, or you use someone else's like table funding. In essence, that's literally kind of what you're doing. But yeah.
Yeah, I mean that reminds me, like when I got a couple of my traditional mortgages, like sometimes you get that letter in the mail that's like, okay, gigantic mortgage company has bought your loan.
Yeah.
So, I'm curious
Yeah.
about what kind of companies that you're talking about that buy, or that take over these hard money loans.
Yeah. So it's kind of funny, man, because no one really to get into nuances of how our world works. It's there is a private world for private money. So one of the big players is Tran. That's who we sell our loans to. They're a big fund. They just buy a bunch of stuff. But it's a bunch of other small companies like ANS. And again, no one's gonna know this. And again, this is getting into the weeds of it, but it's literally just bigger funds, bigger capital funds that buy these stuff because again, they're making money off the interest and everything. So beyond that, they hold that because again, they're just making money off crazy money off of the interest because again of the spread that we get into these deals because again it's a high risk for us. So for them, they're just milking the year that they have the loan. And if you need to extend, then cool, that's on them because they kind of make that decision do we want our money out there still, yes or no? Yeah, that risk is fine. So yeah, we'll extend for another 3 months because they're just going to make more money off of the interest only. But other than that, it doesn't get sold from another one to another one to another one. They just literally hold it. And because again, it's only a year, their returns, their yields is crazy because again, it's a risk to them, but they're getting rewarded for that risk.
Yeah. I want to go back to one of your points you made about, the comment of some people might say, oh, you're too expensive or that's really expensive. But it's about opportunity cost.
Yeah.
And, if the right deal lands on your plate, are you able to capture that deal? Yeah, everyone would love to go to a normal, and work 30 days. But the seller, depending on the situation, not as attractive.
Might not be able to appraise, right?
Yeah, exactly.
It may not appraise. It may have conditions. It may not be financeable, for example, and take too long. Right? A seller maybe is a situation where they need to close in a week. They want money, and private financing isn't like cash, but it's, as you pointed out, it's not traditional underwriting. It can happen in 5 to 7 days, like you said.
Yeah.
And that's the opportunity.
Yeah, exactly. So I mean, it really the way I look at it is you have 3 types of funding, right? So you have conventional, which is FHA, USDA, VA, stuff like that. And then you have private, which is family friends. So your family friend, someone's rich or a group of you get money together and you could literally offer cash because it's cash at that point. And then you have the private world, the hard money, which is us. We're still a fund. We're just not like the first one or the second one that I mentioned, right? We still, because it's a business and we still have to make sure that we're protecting ourselves correctly with these high risk loans. Yeah, everything that about a conventional normal process, just throw that out the window with hard money because we can do things that you're just wait, you can do that? You're yeah, it's a new world and it just works different for us in our world. We can get away with a bunch of stuff and we can do things that you don't have to go through with a normal lender. So
yeah, I mean, I would just say those prices are expensive, but just think you're going to get into an investment property, you're going to put 25% down, and then oh, I need to go fix this place up. You got to find all that money yourself.
Yeah, it's very different. I mean, there's so many ways to get into deals. There's creative financing, which is what I'm crazy about, how to structure stuff creatively to still buy stuff, whether it's private, hard money, conventional money, but just. Man, if you can make your numbers work and if you have enough, I guess spread in it or if you underwrite it yourself correctly, man, just get the deal as long as you have enough, I guess if the deal makes sense, right? But yeah, man, it's a short time fee, one-time fee, and then hopefully the goal is that will help you start your career, if not expand your career furthermore. So we're here to help out as much as we can. Me personally, I love talking to people that I've helped numerous times where they're oh man, I want to get in. And for some random reason, they'll call me out of nowhere, hey, I'm about to go into contract on this thing. Can you close in 2 weeks? I'm dude, you didn't even tell me you were doing this. But I intentionally you were going to buy something, right? So I have no documents. I don't even know what their situation is. And then they give me the whole breakdown. I'm oh damn, dude, we should have structured this a little bit different, but we'll figure this out, right? We'll still close. But yeah, man, as long as we're just a means to an end to try to help you, but I really try to build the relationships, and hopefully you would call me before getting into a deal so I can give you pointers, because again, there's certain things that when you're an investor like myself, I don't just look at it as a transaction thing because I try to see it on the investor side because I'm an investor too. So when someone brings me a deal and I'm like looking at it, I'm like, dude, you could have structured this differently. Like, did you think about X, Y, and Z? And they're like, no, I didn't even think about that. I'm like, you know what? It is what it is. Like, we're here where we are. But next time, recommend, these are my 2 cents. Take it for what you will. But I think this could have been structured a little bit differently to help you in the long run or whatever. But I just love putting stuff together. So when someone tells me like, hey, I have a possible deal, these are my numbers, this is what I'm doing, I'll give them some like nuanced thing to it. I'm like, hey, did you possibly consider doing it this way? And they're like, no, I didn't. And then it changes like the perspective of like, maybe you don't have to use my money. And again, do I want to make money? Yeah, absolutely. But I really just want to see you succeed, for one. And if we build that relationship, hopefully at some point you're going to be like, you're not obligated to use me, but hopefully because we built that relationship, you're like, man, you've helped me, but not really helped me to where like you needed to give me money. You just helped me by being resourceful. Which is what I try to do. I just try to be really resourceful as much as I can. Because man, I buy properties, but I don't buy them with hard money. Like I try to avoid using my own hard money, which is funny. Because for one, like I just be creative with this stuff. Like if I can, cool. I know I can use my own money, but do I want to? No, I don't want to. It's expensive, which I get because I do it. But in essence, like I just try to be creative about everything as far as like, hey man, let me help you. Help me help you in essence, right? Like I know at some point we'll do business, but I think maybe there's a different way you could look at it, or if you're still going to use me, structure it this way. So and then when you get with me, your exit is set up correctly, so you're in a well spot. Because again, that's how I look at it.
I'm gonna peel back some more, Alex. Give our listeners 3 tips and or suggestions about how to be creative here.
Oh man, so sometimes you may not have all the funds, right? Meaning like you're not liquid enough.
Yep.
Like you're right, you have money, but to close the deal, you're not liquid enough. My top some pointers that I always give out to people is there's always someone within your network that wants to give money or make money or be a part of something. So one of my biggest tips is tell people what you're doing, and when you're about to close on something or get under contract, hopefully you would have shown that you're making that progress to do that, and somebody that has money will lend you money. So again, however you do that, just I don't care how you do it. But if that money now you're liquid, cool. Like that solves problem 1. Like you're liquid now, right? Because you figured out where to get money to get our money, if you will. Third thing is if you want to, when using hard money, especially now, make sure you have 6 months of additional reserves. If you were already planning for 6 months of reserves, make sure you have a year's worth of reserve, especially now with what's going on in the market. Yep. Because now
might sit a little bit longer than you.
Yeah, man. What's the average days on market now here?
Oh man, we're about 50 days.
50 days?
Sounds really bad, but 50's not.
It's not bad. It's not bad.
But when you're remodeling, fixing, flipping,
hey man,
numbers are kind of declining still.
Yeah. Like we mentioned, every 30 days, man, you got a big payment of interest only coming in, so that eats in your profit, right?
Yeah.
I mean, you're struggling, right? You know what it is.
Hey, but yes, I am.
Right, but right?
It's no fun.
But in essence, right? So just make sure that you have enough reserves. So if you originally had 4 months because you think you could finish this thing in 2 months, cool. Just add another 4 to it, double your reserves, no matter what. Because I can guarantee you, and I'm saying this because I'm seeing it, those things are taking a little bit longer to sell. Yeah. Especially again if you're not buying in the median US price point, which again is about $350. That's still on average for the most part, across the country, that a first-time home buyer can still afford, even with the rates right now. It still kind of pencils out for the most part. But if you're above that money gets expensive very, very fast because it's just a lot of money. So just try to have a little bit more of a cushion, because I can guarantee you'll get to a certain month and you're like, holy crap, this thing is taking 3 months longer, and I didn't factor that in and I don't have the money, or it just now my money that I'm by the time I do sell, because again, a normal conventional lender is going to close in like a month in a couple of days. So
Well, I'll say this: you don't always have to sell. Like, there's not.
Oh, yeah.
Yeah, you could always.
Oh, yeah.
finance to
Oh yeah, absolutely,
lending. So, like,
absolutely.
you know, like people who I tried to sell, and I couldn't do it. Like, so
Yeah.
it's like an opportunity to like, hey, maybe I'll refinance.
Yeah.
You know, get a loan that will actually pay towards my principal.
Yeah, totally.
And like get a renter in.
That kind of goes leading to my third point, right? So the three top things is figure out how to get the funds, meaning tell people what you're doing. At some point, somebody, if you tell them that you're going to do something and then you're kind of working towards that, someone will bet on you at some point. You just got to be very proactive about it. You'd be very surprised, and I didn't know this, man. People love giving money if you can tell them they're going to get a return, as long as you do it with, a professional manner and it's a business thing, right?
Love investing and helping people out
all the time.
especially if it's someone that you know and trust.
Oh yeah, absolutely.
Yes, give me money, please.
But it's crazy because you would have told me this 5 years ago. I'd be like, dude, who's gonna give me money? Ain't nobody gonna give me money to buy a property, right? But I look at it very differently because again, in the world that I'm in, and I see it on a daily basis, right? So the first one, figure out how to get the money if you don't have the money, and there's ways to do that by telling people and working something out with them to be liquid, to be able to buy what you're trying to buy. Partnerships, whatever. How you can get very, very creative with that stuff. If you really want to know what I mean by that, feel free to hit me up. But the second thing would be add an extra cushion to whatever you have, just in case if you have to hold it for longer, whether you're selling it or you're refining it. And then the last thing, literally, if you don't go into now specifically, if you don't go into a deal with more than one exit strategy, man, you are setting yourself up bad. Because if you're trying to backtrack when you're if you're backtracking, meaning like I need to figure out how to offload this thing, and you're like a month or a couple of weeks into the market of like listing this thing, now you're costing yourself a lot of money. And so I tell people like, hey, if this doesn't work this way, obviously refi it this way. If that doesn't work, refi it on a DSCR type loan. If that doesn't work, then cool, maybe you can find another private lender that can pay us off, and maybe you can hold it with them for just getting really creative and nuances, like really creative. Just find out many different ways that you can keep it or sell it, but how you keep it and sell it, there's like so many different ways you can go about it.
Clarify to our listeners what a DSCR.
A debt service.
Sorry.
So
Debt service ratio. Yeah.
So that is like a whole different thing, right? So that is like it's a business type loan. They base it off of the way that they give you the loan and how they'll qualify it is based off of the revenue that the actual property is making.
Yeah. Will the rents cover the mortgage?
Exactly. And then every lender that I've talked to that does that, they all have different things.
Different.
Yeah, they're all slightly different. So you'll hear people say, or lenders say like a 1 to 2 point ratio or 1 to 2 cover, whatever. So it's just, again, those numbers just vary off everybody. And some of them will even say like, hey, there's an additional side note, like besides that, we need this. So I would always just say talk to people. But in short, it's just another type of loan, business loan, commercial loan, that looks at it very differently from us and also from a normal conventional. So that's like a whole thing different. And you don't touch those really unless like you're looking at like apartment buildings type stuff. You can still do it with like single family homes, multifamily, like 1 to 4 resi type stuff, but it's not very common. But you get to that point when you're tapped out on the 10 loans that you can have with like conventional FHA, Fannie Mae, Freddie Mac type loans.
Yeah, or if you like write off everything on your taxes.
Yeah. It's just another creative way to get, financing without you being too much of the reason why you would get the loan. They just really base it off of the property in essence. So very, very different. So like us as hard money lenders, we kind of work the same way, but we're not the same in that because we still look at you like, can I trust you with this loan? Where them, regardless if they trust you, they know like, oh, cool, like if we need to offload this, like we're still making money regardless because of our
there's a full underwrite for that too.
Yeah, very, very different. And again, I've never gone into that like as far as like trying to get one. I know a couple of people that have like gone through the transition of getting one, but I've never deeply got into it. But that's just a whole nother type of money debt that you get into once you get to a certain point in like investing, because you just have too much, or you can't get financed because you're capped out, or like because refis just don't work like on a normal conventional. So you have to go there, or you just have too much debt in essence, which kind of reverts back to you anyways. But another type of loan.
Yeah.
We don't do those, unfortunately. I wish we could. Some people do. Some hard money lenders do. Unfortunately, we don't do that. We're getting to that point, hopefully, because we want to be your one-stop shop. Like if you can get your loan with us and then refi with us, cool. We're just not there yet. We're working at that. There's just a lot to go into that, but we're working at it. Hopefully hopefully in a year we'll be able to do that. Be able to offer that to everybody, but.
Would you mind sharing with us what your current real estate investment?
Yeah. So right now I'm just on a duplex that I have out in Vancouver. So I had a property
In
out.
addition to your single family that you live in.
So no, I had that. So in order to be able to get the multifamily, I had to sell that. So
okay.
this is literally what I meant by like, had I known what I know now, I never would have bought that property. That property was horrible. It was, well, not the physical property itself, on a number basis was horrible. But I was doing house hacking, which is what I specialize in now. Like my niche is house hacking in a BRRRR method without using hard money because of how I go in these properties. But the single family house that I had was a detached condo, 3-bedroom, 2.5 baths with a garage for $240, which again, I wasn't sharing any walls, which is crazy to say on a townhome because you have to usually share one. Yeah. But it was cool price point, fully renovated. However, when we bought this thing, it was literally right off of 122nd. So when I mean like right off 122nd, if you put so you're driving on 122nd and you were to park 2 cars from the road, you were in my driveway. That's how close.
122nd what? Powell?
Stark and Division.
Stark. Okay.
Yeah, Mill Park.
Okay.
Very, very hot area.
Yeah.
Not in the good sense. Not in the good sense, hot area. But this is before what I know now. And literally a couple of days into buying this thing, I didn't do enough research and I didn't realize that I bought this thing. And we lived next door to the fire station and we lived like 4 blocks away from like the police station. And if you're on 122nd, dude, that is a freaking freeway. And especially if you live between Stark and Division, man, that place is horrible.
Did you sleep?
You know what's crazy, man? I
got
so,
used to it, right?
well, no. So yeah, yes and no, but so
Being by train track.
yeah. So my mom and my dad, where they own their house right now, is off of 82nd and Johnson Creek, nice area of Milwaukee. However, like I guess like maybe 15 years ago, it's a very nice neighborhood now, like very nice city for the most part to buy a house. But there was still like police sirens, which is normal to me. Like, which is kind of crazy because when I moved to 122nd, it was like, oh, this is normal. But it was like to a different, like, yo, this is not normal. Because I was like, I hear cops 24/7 and obviously because when anything happens, I don't know why, but someone can tell me, I guess. But firefighters always get sent out, and so literally for every little thing, soon as like the fire truck came out, like no, I can see the lights already. And as soon as it would pass my house, the thing was just blaring. So it'd be 1 o'clock in the morning, 2 o'clock in the afternoon. It didn't matter. That thing was going off like an alarm clock every day. And then obviously the cops. So it literally every day, 24/7. It was like I lived at the fire station or at the police department. It was freaking horrible. My girl was like, dude, I lived in Aloha and you brought me out to 122nd. Like you took me from a good neighborhood to a ghetto neighborhood. I was like, you know what? It's all right. We'll figure this out. But yeah, number wise, it just didn't work. It was going to cost me money to keep that. So I had to sell it in order to be able to buy the multifamily that I have now, which is out in Orchards. Very nice. Totally different. When we were renovating this place, dude, I was so traumatized. Like I didn't realize how traumatized I guess I was. And it's funny to say, but not funny. We were working on the house and then there was times where we would sleep there. I left, and this was during so I bought this place in February, and so this was like going into summer. February was cold, and then summer kind of came, April, May, and we were pretty much done, but we would sleep there sometimes, and I would forget that I left the windows rolled down with the car keys still in it. Like I don't know how many times I don't know how many times we did this, and I would wake up in the middle of the night because I was like, oh. I was like, dude, that car is gone. I was like, my car is gone, which happened to me at 122nd. Someone stole it. But I was like, and I would be afraid to look out the window because I was like, dude, if I look out this window, that car is gone. I'd look out the window. never failed, dude. That car never got stolen. My car, yesterday, was it yesterday? Was it? Yeah. Yesterday I went to the store. Me and my girl left our keys in the door still overnight. Bro, I'm telling you, bro. Me and my girl were like, dude, we really got out of the hood. Like, yo, like, our stuff would be gone if we were back on 22nd. My car would be gone. I don't know how many times we left our car open, unlocked, our door unlocked, like garage still open with full of everything, dude. And it's a nice area. It's an orchard. It's they're throwing money in there, like a lot of money in that place, in that little city of Vancouver. But yeah, man, it's a nice neighborhood, quiet. Like, granted, the only thing is there is a main street kind of, but it's like, man, it's like half a football field from us, like the main street. So you can still hear stuff. And there's a high school, I guess, down the road. So I still get those like teenagers that, you know, drive their car and they're just like zooming. But I'm like, dude, that compared to what I was going through, I was like, dude, I could deal with that. That's not even a problem.
I completely understand. I grew up in North Portland, and for some reason, I didn't lock my doors for 20 years. I don't know what it was. The ballsiness in me growing up there, I was like,
man,
just not gonna lock my
doors.
Dude. Come on, come walk in, see what happens.
Dude, yeah, man. You know? I was more so like, because of my girl, you know, I would leave and she would be home alone or whatever, but just for her safety, if you will, like she was more so like the concerned one. I was like, dude, I kind of grew up in this. I was like, I don't really care too much. But once you can't like control once you're not able to control something, I guess that's when you're kind of like, oh, like I guess I should be a little bit more like careful, caring. Yeah,
I had to learn to lock the door when I moved to San Francisco, because my roommate was like, you have to lock the door. I was like, is that a thing?
My wife came home last night. It's like, you left the front door completely open.
Oh, dude, oh man, every day, dude. My girl asked me, dude, we get out the car, and we're not even like 10 feet away. She's like, did you lock the door? I was like, you saw me lock the car. Like, how do you not remember I locked it? She's like, I don't know, man. I keep forgetting if we do.
How you fix it? You get one of those door locks where you close the door and then it locks by
automatically. Yeah,
like within 5 minutes.
You know what's funny? She'd probably still ask her, like, yo, did we close that door? Regardless, even she's just that paranoid.
Is the door wide open?
Yeah, bro. She's just that paranoid.
So this duplex, then, how is the rent for it? Are you?
Oh, dude, killer, bro.
Offset most of your mortgage? Or?
Oh man, yeah. So the way that I underwrite my deals, right now, the way I underwrite my house hacks are a little bit different. So what I do is I look at it on a cost of living basis. So when you are buying a property, look at what it is going to cost you to live anywhere, and you should have everyone has a max, like no matter what it is. Like you may not know it to the last cent, but you have a general number, like, yo, I'm not going to pay this after like electricity, water, sewer, etc. Right? So I always tell people, look at that and then add what would be like capex, maintenance, reserves, whatever, however you want to put it out, right? Add that to that. That should be your cost of living. Because even though you buy or you don't buy, when you're renting, hopefully you're putting maybe 1% to like your savings, right? Which in essence, you can switch that around and say, oh, that's going to go to capex. And maybe you have like another percent that's maybe hopefully going to like, emergency fund. So now switch that from emergency fund to reserve fund, whatever, right? So you should literally look at it on a number basis, and whatever that number comes out to, that should be your cost of living. That's how I look at it. So if it costs me after all of that $2,000 to live, it doesn't matter what the interest is, it doesn't matter what the price is, as long as my cost of living is that, I'm already the deal makes sense for me. Granted, for me, because my cost of living versus like your guys' cost of living is probably very different. Everyone's cost of living is different, so you can't say like there's a true hard set cost of living. But the reason I look at it that way is because the first year, if not even maybe the first year, but if you look at it on a year-to-year basis, if you have a duplex, triplex, quadplex, whatever, if your cost of living is the same there every year or every couple of months, I guess depending on how your tenants and your leases are set up, your cost of living should go down every new lease, because you're raising it either by $100, $25, whatever. So for me, my cost of living so my cost of living is $2,100. That's literally what it costs me to live, like water, sewer, electricity. So even if I were to leave this place, if I go rent, I look at it like, cool, rent here is going to cost me $15 after maintenance, capex, because I'm still putting that stuff away anyways. That's what it costs me to live, is how I look at it. If it doesn't pass $2,100, then cool, I can afford it. or that's my buy box, if you will. So when I look at these house hacks, as long as after the rental income is, and what's left is it costs me $2,100, cool. The next month, maybe because there's a lease turnover, I'm going to raise that rent 50 or $100. So now my cost of living goes down. So now that money, I just put it away to another account. That is going to fund the next project, or that's going to be able to go into my reserves, my CapEx, whatever. So, and then I do that again. So for me at this property, it cost me $2,100 to live now because I raised the rent already once. One little thing that I love about Vancouver is they are not like King County, which is exactly like Multnomah County, which is horrible for landlords. There's no cap. There's no rental cap, so I can raise the rent $100 to $1,000. Like, it does not matter. So I raise it not significantly, but enough to where I'm like, yo, it has to meet my numbers anyways. So my point for me is I want to buy more, but I'm doing it within reason that every year I'm raising it. But now my rent originally was 21, or my cost of living was 21.25. Lower that by $100, and now their lease is gonna expire in like 5 months, and I have to give them another notice, and it's gonna go up another $100. But for me, that's another $200. So in over 2 years, I gave myself like a $200 raise. So you times that by 24. That's technically cash flow because it's money that's staying in my pocket.
Yeah, and I'll mention, if people don't know what that cost of living number should be, rule of thumb is it should be 30% of your gross income.
Yeah, everybody.
It's different.
Everybody's is different, right? I've met.
Rule of thumb, of course.
Yeah, right. Like, it is. I don't think there is a wrong or a right. It's just you just kind of have to know your numbers. Like, what does it truly cost for you to live? Some people live lavish. Like, some people need like everything, and so their cost of living is a little bit more expensive. I don't need a lot. I just need enough because I'm okay. But yeah, I've met people where their cost, like, I know their cost of living is like, dude, there's no way you live off of like $2,000. Like, I just know you can't. And I know some people that live like off $1,500 because they're just, it's just the way they have lived, right? So for me, that property is pretty much the way that I do that is kind of circling back. So bought that in February. My cost of living there was $2,125. Now it's $100 less, and now it's going to go up again in a couple of months. So in a matter of 2 years, obviously they've paid off a portion of my loan because it's loan pay down, right? My tenant's paying some of my loan off. By year 3, I'll be able to refi out of this on a rate and term. And then now both rents, I'll be able to cash flow per door at a minimum of $200, no matter what. So now you're looking at $400 a piece per door, or $400 in total cash flow. And again, I didn't really pay much more than if I didn't buy the property because they paid down my loan, and now I'm cash flowing literally $400 in total off that property. So I saved money, they paid down my loan, my cost of living didn't change, it went down, and now I'm able to reuse FHA again because I'm refinancing into a regular conventional loan. So you can use FHA as many times as you want, you just can't have it active. That's the only thing. So that's how I buy properties. I just buy it FHA, live in it, fix it, like the BRRRR method. And then by whatever year, once I hit the 75 loan to value, I refinance out of it. But I know going into it at what year my LTV is going to hit the 75%. So I already anticipated like by year 3, so a year and a half. Yeah, like year 3, I'll be able to refi out of it.
That's awesome.
So yeah.
And just a quick little story. So I met Alex at a networking event. He is really personable. Like, I was one of the people who actually stayed afterwards.
Yeah.
And I did notice, like, there are a lot of people walking up to you. So if there was a young person who walked up to you and asked you, like, how would I get started in real estate investing? How would you do that? What would you tell them?
Man, so I've actually had a couple of people ask me that. I just tell everybody, invest in your education, man. Like, invest in understanding what you want to do. And in real estate, there's so many different avenues that you could get into, whether you're on the investor side of the world, meaning you're buying the stuff and doing the work, or you're the transactional side, meaning you're a contractor or a lender, agent, whatever. But figure out what you really want. Like, are you looking for freedom? Are you looking for money? Whatever that is, you can always trickle that down to like a certain thing that you want. So just know what you really, really want. And when you do, it'll be much easier to understand how to get in. Like, if you need capital and you're good with people, you might go wholesaling. Like if that's what you really want and you don't really want to buy nothing, you just want to be transactional, you do wholesaling. If you want to be an agent, you know, there's a reason why you'd be an agent. If you want to be a lender, you know, go be a lender. But there's always, I think, a core reason how to get to where you want to be, as long as you kind of backtrack. So I always tell people, invest in your education and literally know what you want to do, and it'll be easier to get there because you're not like a squirrel. You're like looking everywhere, right? It just makes it easier for you to kind of get into where you're trying to get into. So I tell people, you know, whatever you're trying to do in real estate, literally invest in your education, figure out what you want to do, write it down, be very specific on your goal, because then you'll say no to everything else, and it'll be much easier to get to that one thing much faster, whatever that is in anything. That's literally like the 2 cents that I give to everybody. Just figure out what you really, really want, say no to everything else, and just say yes to that. Because then you'll get there much faster, because everything else is going to deteriorate you from what you're trying to get to.
And if people wanted to contact you, where would they find you at?
So you can find me on social media, man. So I just Alex Mora on Facebook. If you want to follow me on Instagram, it's Alex Mora.
You have an underscore in there?
Yeah, it's underscore. Yeah, I can't remember if it was an underscore.
Mora, maybe?
REI. Alex Mora underscore REI.
Okay.
But yeah, that's pretty much it. And if you want to email me, you can email me at my work email.
What's the REI stand for?
Real estate investor.
Okay, just one.
Yeah, that's just real estate investor. I saw a bunch of people that were like in real estate, and they all put something that had like real estate in it. So I couldn't figure out anything else. So
Work at REI?
I don't know. But yeah, it's real estate investors. So that's literally what I do. So that's what I did too.
I heard here was stay late at events.
Yeah.
Right.
Oh yeah, dude.
Shoulder to shoulder with people.
Oh, yeah.
Don't be afraid to approach anyone, ask for help.
Always.
You know.
What do I always say? Put yourself in. People always say I'm lucky, but I always say put yourself in opportunities for luck.
Always. Yeah. I mean, I am where I am now because I was in rooms that I didn't think I was going to be in, but I forced myself to be there because I was literally told that by some dude bigger pockets, where they were just like, dude, just go to your meetups and you put yourself in a position that you didn't ask for, but it was a good reason that you were there, and you are where you are, hopefully because you were in a room where you set yourself for opportunity, even though you maybe weren't initially going for that, but it just works out that way. So
Can't catch a fish if you don't go fishing. You know.
Yeah, man, exactly.
Lucky if you don't give yourself a chance.
You got to. At some point, you got to do something. So, but yeah, that literally.
Get a girl that tells you to buy a home.
Yeah, yeah,
18.
yeah, dude. Get someone to light a fire under you, man.
That's right.
That usually helps. So, but yeah, man.
No, I love it. Thank you so much. We really appreciate your time here.
Yeah, no.
Coming on the show, man.
Yeah, no. Appreciate you guys for having me, man. Thank you.